Welcome back. I'm Pratap here. Today is 16th September 2024. In this video, let us evaluate the performance of the high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing the tab community instead of posts. Whichever the tab you see, you please click on the tab, then you get access to our free training program. And this post is having a YouTube playlist link that will take you to all the training lessons. Just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. So in this playlist you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones we identified. So previous report we have identified 5 high liquidity zones from daily and 75 minutes time frame. So out of these 5 we got 2 trades. And one is a very successful trade and second one is also successful, but we didn't take because RR is not there. And that too, that is the last 1.5 hour of the trading session. Okay, if you look into this, this is the Bosch 75 minutes high liquidity zone. So this is the failed ERC candle we are using as a leg-in. We have 2 base candles and then a rally candle. So this is what identified by our software as a high liquidity, 75 minutes high liquidity demand zone. So this 75 minutes zone we fine tuned with 15 minutes time frame. In the 15 minutes time frame, we identified 2 15 minute zones. One is a rally, base rally with a hidden body. And then again you have a drop base rally. So these are the 2 15 minute zones we identified. Again fine tuned these zones with 5 minutes time frame. So here you have a rally candle 1, 2, 3. First 2 are a base candle, second one is a medium size, but it can be part of the base, and then a rally candle. This is the 5 minute zone. The another one is a drop 1, 2, 3, 4, 5, 6 base candles and a rally candle. So these are the 2 fine tuned zones. And all these zones are fresh zones. So that's why we can plan a trade. Then what about the target? Target could be 15 minute zones. Go to the 15 minute zone. So immediately we didn't find any 15 minute zone here. There is no clear 15 minute zone. Probably it is beyond this. You need to go beyond this to find a 15 minute zone. And technically that is going to be very impossible to reach at this level, because ROAs is more than 12 or 15%. So that's why we have seen some price action clues we got for the target. See here, lot of rejections from this area. First let me delete this, you will understand. Why I want to keep a target in this area? The reason is rejections. Prices are going and rejections, going and rejection. They were going and rejections. Again they were going rejections. Of course today this was our target, but before today, this was the price action. So that's why I thought we can draw a horizontal line in this area, somewhere in this area, and we can plan for we can fix this target a little below or a little above. But who is the reason? Definitely there could be some high liquidity zone in this area, which is holding the prices, not letting the prices to go beyond this. So first I went to the 5 minutes time frame. So I didn't see any proper strong 5-minute zone here because this is a ERC candle, medium size. So what I did again, I went to the 1 minute time frame. Here I have found a very excellent drop-based drop, the 1 minute zone. So here you have a drop, you have a base candle, and then you have another leg out candle, high explosive leg out candle. Then I have drawn a zone like this. Just remove this horizontal line. See here, from here, prices went and then again came down. Again prices went, came down. Again prices went near to this, again came down. See here, once again prices went and came down. Several times it is this zone is getting tested. First time, second time, third time, fourth time. Again here, fifth time. And today it is the sixth time. Today, our target, it reached the target. First of all, when we got the trade, in this candle we got the trade. Morning 9:17 candle, it reached this fine-tuned 5-minute zone. This is the fine-tuned 5-minute zone. It reached we got the entry. Morning at 9:17 candle, we got the entry, and then prices were started moving up, and then 9:28 it reached the target. That means within 11 minutes the trade is completed. How much profit it has given? It has given over 10,000 rupees profit it has given. Let me show you. Bosch today it has given 10,050 rupees. That means approximately 10,000 rupees profit it has given. And it is a 6.6% ROI. We got 6.6% ROI in just 10 minutes. We got a profit, 10,000 rupees profit. So it's an excellent trade. After that prices again came second time, but this time the movement is very slow, and finally this zone is violated. Sorry. And moreover, from here to here it is 1:3 RR is there, from here to here, 1:2.99. So that is 1:3 RR. And after that, prices came very close to this, again fine-tuned zone. Let me go to the 5 minutes time frame. This was the first trade, tested already and gave good return. And finally this 5-minute zone is violated. And then prices came very near to this second. After that, see the movement again. It's a very good move. You might be thinking, maybe if we use some entry buffer, this could have been a successful trade, right? But unfortunately, our entry buffer, 0.1% entry buffer is slightly missed out. That means this is not a successful trade. I mean, entry, what I mean to say successful trade is entry is not triggered. Successful trade is a wrong word. Entry is not triggered is the right word. Slightly, maybe something lightly few points below, you have entry buffer is there. Just even before reaching the entry buffer, slightly before the entry buffer, they were started moving up. So that means we didn't get a trade actually. Maybe next time again we can plan a trade. Next time means not tomorrow. Again prices coming up, and if the prices close near to the zone, and if our software provides the recommendation, then only you have to take the trade. Please remember, HLQ trades are valid only for 1 day. I clearly explained in lesson 21.3. When I explained about HLQ zone strategy, I clearly told you. Because software, before displaying HLQ zones, the daily and 75-minute zone, it is checking the volatility in the market, and then only it will be giving you the recommendation. So tomorrow you cannot take a trade, you cannot plan a trade. It may work, it may not work. I'm not saying it does not work. It may work or it may fail. It's a luck based. You can't expect 80% success rate in that way. 80% success rate you get only our software listed this stock tomorrow. today, today end of the day, it should display this stock. Otherwise, it is not a valid stock. If software does not display this stock, it is not a valid stock for tomorrow's trading point of view. Whatever the trades, our yesterday's report is displayed, the previous report, they are valid only for today. You can't use those stocks for tomorrow's trading unless those stocks are again displayed in today's end of the day software report. Some of you understood this concept very clearly. Some of the new members are making this mistake. Once again, I am clarifying HLQ zones. I am not talking about bullish or bearish trade setups. Bullish or bearish trade setups are valid as long as a trend is valid. They are trend based. But HLQ zone doesn't bother about the trend. It doesn't bother about the location. It doesn't bother about the price direction. It is only depending on institutional liquidity and NeoStock software volatility calculations of today's market. Based on that, it will identify stocks near demand and supply zones. Such kind of stocks only you can expect 80% success rate. So that's why purely NeoStock software dependency is there for HLQ zones. Hope you got it. Okay, this is the one we missed it. Okay, fine. Then what is the second trade? The second trade is a successful trade, but we didn't take the trade. Why? That is Lalpath Lab. Lalpath Lab is also a 75 minutes high liquidity zone. This is a 75 minute zone. This is the ERC candle as a leg-in, 2 base candles and a rally candle, drop base rally. That way you can trade. And this 75 minutes high liquidity zone want to fine tune in 15 minutes time frame, but I didn't find any 15 minutes fine tuned zone here. There is no proper 15 minutes fine tuned zones. Even you can't consider this is a rally base rally because this is not a base candle, this is a medium size leg candle. So there are no base candles here. But why we have drawn this zone? The reason is this is a aggressive trade setup. We have a 5 minute zone. This is a ERC candle as a leg-in, you have a base candle and then add the hidden body with the gap, fill the gap. This is again going to be a rally candle. From the close of this candle, if you add the hidden body, this is going to be a rally candle. Rally, base, rally. How it is supporting aggressive trade? Because aggressive trade you can also use 5 minutes high liquidity zones. This could be a high liquidity. I am not confirming it is 100% unless software confirms. Why I am 80% I am confirming it is because multiple times this zone is tested. See here, after the zone creation, this is the first test. Excuse me. Then again this is the second test. See, then again this is the third test. See, this is the fourth test. This is again fifth test. This is again sixth test. This is again seventh test. So 7 times already this zone is tested. And today again this is 8th test. See, after it tested, see the rejection and then again how it moved. But remember, at what time this is entered into this zone? This is almost at 2 o'clock. 13:48. The last 1.5 hour trading, mostly reaching 15 minutes, you may not be having good time. The one option is immediately available, 5 minute zone is the target. So here we have a 5 minute zone. I am in the 5 minutes time frame. You have a drop candle, you have 1, 2, 3, 4, 5 and drop candle. This is the 5 minute zone. Mostly you can't take a trade. The reason is this is the RR is not there. Even if RR is there, you have to exit at this 5 minute zone. But at the time of this candle formation, there was no drop candle. See, after it took the orders, after this rejection, this candle is closed, then only you can say this is the 5 minutes target. But where is the next 15 minutes, where is the next 5 minutes target, a valid? Here you have. Drop base drop. Or you can consider ERC candle, 2 base candles and with hidden body. Even this candle also you won't be getting RR. See, this is after the orders picked up. The order is picked up and then this candle is closed. In case if you would have taken a trade, you would have exited here. Because a new target has been formed, revised target, and it reached, you have to exit. But even in this zone also, you didn't have the target. These are the 5 minute zones. Let me show you. Long position. Approximately I am adding some stop buffer here. You have 1:1.8 RR till the top one. So you can't take the trade. So that is the reason, because RR is not there, you would have exited. Even if you take, you would have exited at the 5 minutes. But that is a negligible profit, small profit. But anyway, we can't take a trade because RR is not there. Moreover, this is almost at the closing hours of the market, near the closing hours. Last one and a half hour trade. Because 15 minute zone is there very, very far away. So this is the 15 minutes target you can consider. So this could have been the 15 minutes. If this is the 15 minutes target, still you may not be getting a, still RR also you won't get. I think 1:3 RR is not there. Some approximate stop buffer, calculating approximately. Some 1:2.7. Experienced people may consider this trade 1:2.5. Even if they would have taken a trade, they have to exit at this 5 minutes level because see the movement already it is at 2 o'clock in this candle. You can't extend this trade for a long period. So that's why taking a trade after at 2 o'clock or 2:15 or 2:30 is a high risky trade. Closing hours of the market, you won't get enough time to push the prices up to the 15. Maybe rarely, sometimes we may get, but this is almost at 2 o'clock trade. So that is the reason why this trade is rejected. Reached only 5 minutes target. After that, again this new 5 minute zone pushed the market, and this entire high liquidity zone, which is tested several times so far. See how many times it is tested. I already told you, every high liquidity zone will have a expiry period at some time. Those who are planning trades on this particular zone, they might have captured several trades. And today maybe your trade would have been stopped out today, if anybody would have taken. But earlier trades, generally people who trade on the high liquidity zones, they keep on trading until one day it has to be violated till that day. That day they get the stopped out trade. Remaining all the days, whatever the profits they get, they will enjoy the profits. This is how some people will trade only on the high liquidity zones. The 5 minutes high liquidity zones or fine-tuned 15 minutes high liquidity zones. They trade like that. Because Nifty and Bank Nifty, whoever do the trading, because why I am providing Nifty, Bank Nifty supply demand zone chain, because the 5 minutes and 15 minutes high liquidity zones will be there. Some people trade only on those zones. Okay, remaining stocks we didn't get any trades, but let me quickly show you. First one is ABB. ABB is a daily high liquidity. demand zone. Actually, previous class I explained ABV. I was a bit confused. Earlier we already discussed. I think in the last session, I thought this is the 75-minute zone. Actually, it is a daily zone only. We have a rally, base, rally. This is the ERC candle, base, rally. And recently it is fine-tuned. Already I explained how I fine-tuned these zones earlier, but this was the recent one. In the 75 minutes time frame, we have drop base rally. In this drop base rally, we have 15 minutes drop base rally again. Again, within this 15 minutes drop base rally, we have fine-tuned 5 minute zone. We have rally, base, rally. And also a lower time frame zone as a horizon to the higher time frame zone. Probably there could be strong order flow will be there, rally, base, rally. And this entire 15 minute, 75 minute zone is created. Actually, this is the 75 minute zone. Entire 75 minute zone is created by picking the orders from this 5 minute zone. So this is the lower LTF zone, lower time frame zone as an horizon to the higher time frame zone. So in this zone, strong order flows might be there. But anyway, today prices didn't enter into this area. We didn't get any trade opportunities. Next one is Bank of Baroda. Bank of Baroda is also a daily high liquidity zone. Rally, base, rally. This is the daily high liquidity demand zone. And let's go to the 75 minutes time frame. Here we have a drop base at the hidden body. The moment you add the hidden body, this is getting a rally candle. This entire thing is a ERC candle. Hidden. This is a hidden zone concept I explained in lesson 9. In lesson 9 you learn this concept. Drop base rally. So this is a drop base. So you need to add the hidden body. This entire thing is going to be a rally candle. And the entire candle will be a ERC candle. So this is the 75 minute zone. And next this 75 is fine tuned with 15 minutes time frame. So here in the 15 minutes time frame, we have ERC candle as a base candle and then a rally candle. This is the way you can understand. Drop base rally. This is again fine tuned with 5 minutes time frame. Drop base candles and a rally candle. Again within this drop base rally. This is at the proximal line, this is at the distal line of this. Just a minute please. Come back. Okay, I'm sorry. So let me go to the 15 minutes zone time frame once again. Here you have a drop, 2 base candles and rally. This 15 minute zone is fine tuned with 5 minute zones. Those 5 minute zones are these are the ones. Drop base rally. Again drop base rally. 2 order flows are here. And below that there is a 5-minute zone, see here, this is not a fine tune, this is an aggressive trade setup. We have a rally, 2 base candles and a rally. Why I have fine tuned this zone? Because this, even though this zone is tested, see this is already tested. But why I am considering a lot of strong order flow is there near the zone. See here, just before entering, how the movement. Again prices came here, see the push. And even in the recent time also, just before that, new zones are created. See here, before entering, again prices were started moving, and also a 75-minute zone is created here. So by considering all these price actions, even here also, just before this price action is taking place. So all these price actions are just before this zone. Maybe if any of these zones are violated, probably we can plan a trade. There is nothing wrong, because institutions kept a lot of order flow in this area just before this zone. So that's why I have drawn this, but this is going to be an aggressive trade. In case if all these zones, if this 75-minute zone is violated, then it will pick up the orders from this 5-minute zone, and again it will push the market up. At the time, again a new zones might be created. So that's why I have drawn this 5-minute zone, which is not fine-tuned, but it is a supporting aggressive trade setup. Rejections before the zone, or prices moving away from this zone. So this is how Bank of Baroda I have fine-tuned the zone. Both we already discussed, and the last one is sale. Sale is a 75 minutes high liquidity demand zone. This is the one. It's a rally, 2 base candles and a rally candle with hidden body. This I fine-tuned with 15 minutes time frame. Here I have a medium size candle rally, 3 base candles and again a rally candle. So this is the 15-minute zone. Or you can also consider drop, base candle, rally candle. This is also valid. Drop, base, rally. Either way you can draw. Whatever you draw, almost the zone is same. No difference. And next, fine-tuned with 5 minutes time frame. So this is the drop candle. These are the 2 base candles, and this is the rally candle. Even this is a high liquidity zone, this 5-minute zone. How can we say this is a high liquidity zone? Because software identified stocks near 5-minute zones. This 5-minute zone is identified in the previous report. So that way we have identified this 5-minute zone as a high liquidity zone. And this zone is already tested once. See in this candle, the prices came and the rejection, and the next day again see the move, continuation to this. Even though it is tested, can we plan another trade? Yes, because 5-minute zone is a high liquidity zone. Until the 5-minute zone is violated, we can plan a trade. Of course, once at some point of time it might be violated. Maybe next trade also it may be violated. So that is the reason why we never know how many times high liquidity zones will be working. It could be 1 test, or it could be 2 tests, or sometimes it could be 5 or 6 times it will be tested. So why you want to lose the opportunities? When it provides multiple opportunities, utilize the opportunities until the zone will be violated. Because you take the trade only if the risk is within your accepted limit. If the risk is beyond your accepted, anyway you don't take the trade. So these are the high liquidity zones identified in our previous report. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.